wedges, if you will. We're good. We're good. We're live. Ladies and gentlemen, bearish wedges continue to plague the market. Is this going to be earnings week or earnings week? Embrace it. How you can embrace it and make money on it. Our precise daily stock levels, our full stock analysis, as well as our game plan in Forex, which I should have said before. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk about. I'm also going to share with you a very interesting phone call I've had today with somebody who is remotely famous, and I'm going to share his views on the market. But first, I would like to say thank you to the friends I've never had a beer with knowingly, nor do I know any of their first names, middle names, last names, or anybody in their family over at the T3 Live Compliance team. Kindly pause this video, and when you are finished reading, then hit play. Thank you so much for reading that. So we have phone call. What should I get? What should I share with first? The bearish wedges in the market chilling out, or the phone call? Which one? Carlton, hit me up. Which one? Bearish wedges. Okay, so we're going to first discuss bearish wedges and chilling on. Nope, Carlton already spoke. Bearish wedges and chilling out. And we're going to start off with what's happening in the market. So what is a bearish wedge? It is a wedge that statistically resolves down. A wedge is when, a channel comes to a conclusion and then the stock must move up or down. These are bearish wedges. And I'm going to, I used the word worrisome in the beginning, but I guess I should have renamed it to worrisome if you are long any of the major FANG names like the majority of these large companies on the planet. Look at Facebook today. Look at Facebook today. Did anybody realize that Facebook put in an inside candle today on a bearish wedge? What does that mean in English? It means you're going to resolve between tomorrow and Friday. That's 100%. The thing is, it's going to be interesting how it resolves because you're going to have artificial movement in a name like Facebook based on Apple and Google and Amazon. Because we know they're going to report. And if Amazon gaps up, they'll shoot the market up. And as you guys know, I'm predicting Amazon earnings to suck. And I'm predicting Google earnings to rock. But look at this rising wedge in Facebook. The beautiful thing is I have precise daily stock levels, and I'm going to show you all the levels where these things can hit resistance and break down, so you'll know how to trade accordingly, and we'll get into that later. But look at that. All right, that's Facebook, Mark. Apple, oh my goodness. Little bit of a sharp rising wedge there in Apple. Kind of funky looking. Bearish, though. Netflix. Okay, this is not a rising wedge. Now, you see, this is one of the FANG names that are not a rising wedge. It's just bearish. Remember on Tuesday night of last week when I was telling you that Netflix earnings sucked? Kaboom, 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 kaboom. So the stock went from 380 to 320, 60-point drop from where it was at the high or near the open after they reported earnings and traded live. $60 drop. That is major move for Netflix. This is not Berkshire and Hathaway A shares, ladies and gentlemen. This is Netflix. And then I came to you and I'm like, PayPal earnings rocked. That's, of course, before I told you PayPal earnings were going to rock, and then I read them and confirmed they rocked. Look at that one hold up. This is good because it shows you the cream rises to the top. And if you could cut through all this analyst garbage and all this analyst BS, you're going to be able to see the picture. So Amazon, little rising wedge there, very minor, not as sharp and defined as some of the others. And of course, we have Google. It's another rising wedge. My two favorite ones for the short, Facebook. Facebook is my favorite short. Why? Why would Facebook, out of all the FANG names, Mark, why Facebook? Please remember, I was the person after Facebook got slamma-jammed that was never really bullish on it after July, and I'm still not. I continue to be bearish at these levels. And granted, I was able to trade it long and short and everything in between, but this is a rising wedge. You're trading under all the moving averages here. There's talks that the board or shareholders rather want to replace Mark Zuckerberg. Really? I never understood it. Why aren't computer nerds good business people? You mean because he was able to steal some code from his friends over at Harvard that he doesn't know how to run a multi-billion-dollar company? Who would have guessed it? Just because you enjoy driving a car doesn't mean you can replace an engine. All right? Mark Zuckerberg, I can't really say anything bad or good about him, but it just takes me back to when I was bashing Snapchat, where the imbeciles over at Snapchat decided they didn't want their shareholders to have a say in the company. And you know what happened? When Snapchat opened up all the way back here and IPO'd and it opened up at 24 and then shot to 29 and a half. You know what? I had a $0 target on Snap, and I continue with a $0 target on Snap. And you probably heard me say this dozens and dozens of times in the past that Snap, is it going to go to zero? No, they'll probably get to a point where someone feels bad for them and just wants to take over their user base and buys them out. But until that happens, you are going to zero. Same thing with HMNY. Same thing with HMNY. Oh, Mark, I love Movie Pass, they told me. And then I realized that HMNY just keeps doing reverse split and is run by the stupidest. Yeah, by far. Like, he takes the cake as the most imbecilic CEO, maybe on the planet. I don't know. I have never seen a worse. I've seen bankrupt companies that work better than HMNY. I have never seen a more incompetent CEO in my life than HMNY, and I put a $0 target on it. And granted, I'm not exactly right yet, but I'm a couple cents off. What's a couple cents between friends? So, you have bearish wedges. You have to chill out. What does chilling out means? Do not be the person who is trying to buy stocks on support levels I can't tell you what to do. That's what I'm telling myself what to do. Mark Melnick, do not be the person who buys stocks on support levels. Why? Because it's just not, even if you're right, it's just not worth it to do with size. Do it, but tear down a little. Trend lines still work. Our algorithmic trend line course, follow it because those are the people who are doing well in the market. CGC, perfect example. We drew a trend line. Draw it on your own chart. Watch. CGC, draw it on your own chart. I dare you. Take a daily chart, connect the bottom of August 28th of this year, and connect it to the bottom of September 14th of this year. And you know what you get? You get a 5-minute chart that traded CGC like this today. And that's why in the room, when you guys were asking me, when CGC was plummeting today, I do mean plummet. I am not over exaggerating with that word. It went from 40, almost 48 bucks, 47.83, which is ironically the pivot point to the penny, and fell to 40, was falling to 48 to 47, 46, 45, 44, 43, 42. And what did I say? Has to break 40. Why? Why does it have to break 40, Mr. Melnick? Because of this. See that? Comes down, bangs against this trend line here, right over there, bangs against it, pew, takes off. Do you find that weird how well trend lines work? There's a trader who said that. That's all he waited for today in the room. And he caught it. And then what I did was, I've been not like this. When I say chill out, this is what like I tweet out today, just so you know, for people who are, who are part of my Twitter service. I basically say no names officially made my list today. Sorry, Newsbeat bandits. Low conviction stuff I'm watching for quick trades in, and I listed some. You know which one of these names I took? I ended up just taking Toll Brothers short, which worked, and Hasbro, which failed. I made less than $200 today. I made 19-year veteran speaking to you. I made less than $200 today, and I'm fine with it. I understand that if I'm going to average 5,500 to 6,000, maybe 7,000 a day on average for the year to get that seven-figure number, I'm going to have days where I'm up $200 or less. It's going to happen, and I'm fine with it. So this is the next thing I said this morning. Just so you know, 8:53 a.m. this morning. And I don't tweet, I don't bombard you with tweets. Quite the opposite. Much less talky, lot more speaking what's on my mind. Qs have over 1 million shares. This is 8:53 a.m. in the morning in the pre-market. Gapped up $1.18 at the moment. Not fully convinced we won't head negative today. Then this is what the Qs did in the morning, just to show you. Here's nope, that's after hours. Here's where the market opened right here, October 22nd, here today. Opened up, popped up, and on the next candle, $2 drop on a 5-minute candle with a bearish engulfing bar. New Qs go red. And then bounce all the way back up and then fall back down to the middle. You know what that is? A directionless market. So what's the point? How do you make money? What are you supposed to do in a market environment like this? I'm going to show you what I'm doing. You approach things very, very light. Here's a trade that might fail or work. Took it at 3:55 p.m. I said maybe some $100 low calls, LOW lows. If I take this, it'll be much lighter than usual. I'm tearing down. There are markets where I tear up significantly in certain environments. In the current monthly environment, I'm tiered down because here's the problem. You have a daily bear flag. Everybody is like, oh, buy the dip, buy the dip, buy the dip. That might work. I'm not even arguing and saying it won't. And we also have bear flag. So buying the dip on a bear flag, it's not like we were grinding down and then and we could go back up. You want to know what that looks like? CGC actually was plummeting down and we called a phenomenal bottom. Forget that. Let's go into my Lowe's trade that I'm holding. This one. Lowe's, I basically said Lowe's was bearish on September 10th. What happened afterwards? It actually climbed up and went a little over $5 against the level and where I said we could top out. And then at the max point, of course, like 5.25, higher than where I thought Lowe's could top out. If you were telling me that you were buying puts here on September 10th in Lowe's, I'd look at the chart and say, yeah, I respect that. I like what you're doing there. But look what happened. You had to wait from where I called Lowe's bearish. Again, I didn't take this trade. I remember me talking about this. I called it on September 10th that Lowe's was bearish. Was I wrong? Yeah, I mean, I would consider this being wrong because 18 days later, the stock was 5 points higher. And then, and only then, if you held puts that were a month out, you would have crushed it because it went from 117 all the way down to 98. 117 changed to 98, dropped $20 from that level. So when I called it bearish, it went up 5 and then dropped 20. So let me ask you a question. How do you take advantage of something like that? When you think it's bearish, you want to buy puts, or you think it's bullish and you want to buy calls, how do you take advantage of that? And if you take your size with options and lower it, you're going to be fine. I think I took like 7, 8 calls. I think I took 7 calls in Lowe's today. That's like 12, 1300 bucks at $1.87 monthly calls. When normally I could take 5, 10, 15, 20, 25, 30,000 worth of options in a night. Use that for whatever it's worth. So what's going to happen with these Lowe's calls? Low could drop $3 tomorrow, could drop $4 tomorrow, could drop $5 tomorrow, and I'll just be like, okay. Worst case scenario, if Lowe's files bankruptcy tomorrow, I'm going to lose 12, 1300 bucks. And granted, I don't think Lowe's is filing bankruptcy, but yes, that is the disastrous worst situation. You want to know what the best situation in Lowe's is? Or not the best. The best is, for some reason, somebody tripped over a paint canister in the store and cured cancer somehow. That would be the best thing for Lowe's, but no. Logical situation for Lowe's. They grind up back over 100, 103, 104, 105. And these calls explode through the ceiling. This is a good risk reward. If you're in the room or you have my Twitter service, you hear about it then. Or you could listen for free on the Newsbeat show and you get it now. And maybe Lowe's is lower or higher tomorrow. I don't know. But that is a good risk reward. That is a way that I'm not going to get shaken out of a trade. And if I applied the same mentality and went to the next monthly over here, I mean, beyond a week, let's say I went into October here and I bought puts here, and I threw $1,200 worth of, let's say when the stock was $112.39, where I thought Lowe's was bearish. I'll admit it. I thought it was bearish here. Did I take any trades? No. Did a lot of people in the room take trades? None that I know of. But let's backtrack and pretend I did. We're playing hypotheticals here. Let's say I did take the puts here, and I would have respected that move in Lowe's. I would have had to go a month out. And if I bought 110 puts a month out, I probably would have ended up paying a couple bucks for them. And if I paid a couple bucks for 110 puts and then the stock plummets down to under 100, I mean, I'm going to be up 10, 11, $12 on a two. I'm going to be up 5, 600% of my money. That is a good risk reward. So what I want you to do, especially if you're an option trader, excuse me, again, I cannot legally tell you what to do. T3 Live compliance team people I don't know are standing as the overlords above looking down me. No, Mr. Melnick, that's not the way you speak to the audience. You know what I would do if I were me? And pretty sure I'm me. Like, I don't know if I could prove that though. But if I were me, I would take lower size. If you want to buy something, lower size options that are further out. Instead of me buying, hundreds and hundreds of Baba calls, which we crushed, instead of doing that, I would rather not look to hit a home run and not look to have that same home run bat smash me across the middle of my face. I don't want that. So I will look at a Lowe's here, and I'd rather just do lower size. So for example, let's say your number is 1,000. On average, you take $1,000 worth of weekly options, let's say, for a bet. What I would rather do, if that was me, is I'd rather take $500 of a month's out options. Maybe you only get a few of them, as opposed to 20 of them or 15 of them. Maybe you'll only get a few of them, but you'll have the holding power in this environment. Because right now, let's just call it how it is. Everybody, every single one of you are falling. Your risk is falling with Google earnings. Your risk is falling with Amazon earnings. And Amazon earnings on paper, in my extremely humble professional trader opinion, is going to suck. And I love Amazon. I love their service. I have a baby registry for it. I'm going to be a father again for the second time that I am aware of. And I love Amazon. Their numbers are going to suck. Okay? It's not personal. I love the company. Their numbers are going to suck. If you knew how many boxes I cut up, my house looks like an Amazon fulfillment center. I am responsible for half of 1% of destroying the rainforest in South America. I should be sending my money there to help rebuild the rainforest. That's how many products Amazon hits me up for. Every single day, I have 6 boxes at my front door, and I'm like, ah, shit. Got to open this thing up. Thank God the tape isn't obnoxious. You ever know those companies that send you that really obnoxious tape? Amazon earnings are going to suck. Now, if they gap it up and it sucks, guess what? I'm not going to be here Thursday and Friday. So I'm not going to be able to come out and trade with you guys Thursday and Friday. I'm going to miss you guys severely, but my life is on the line because if for whatever reason I don't hang out with my wife on those 2 days, the Newsbeat show might end because so will my pulse and heartbeat and my vital signs. Those might end as well. So um, I'm either going to increase my life insurance policy to $50 million and trade on Thursday and Friday, or I'm not going to increase my life insurance policy to $50 million and I'm not going to be able to see you on Thursday and Friday. I'm probably going to go with the latter. I'm probably going to go with the latter on this one. So, just being honest, yeah, trade Amazon from there. I think life insurance is the safer policy too. With that being said, I don't want to say falling victim because you're not a victim. You could hit a home run. Heck, you think Amazon and Google are going to get crushed on earnings? Do you realize every single Q name should be able to make you money for the most part? Buying Q puts will go through the ceiling. See, that's the funny thing about the market. People will always look at things in ways in which they could have made money. And I'm going to share with you very important levels right now. So stay tuned. And I'm going to share with you a phone call I had with somebody who has $1 billion+ net worth. So I'm going to share with you that phone call and more. But I will say, be very careful. Size down. I was up less than $200 today. I'll even share with you the trades I did. Again, same ones I showed you before. Toll Brothers. I took a high five strategy, same high five thing I've been talking about forever. Shot up here, shot through resistance. I saw it go through $30 and I knew we hit resistance and I waited to short this thing through 29.67, but shorted some shares, watched this thing go down, and I think my best cover was in the 29.20s, and then I watched Toll Brothers drop to 28.79. I think it went lower than there. No, 28.68 right over here. And this is where I was shorting, right up here, and I watched it go down. Then I was watching Hasbro on earnings, shot through here. I bought some puts right here. They went a little with me, pretty much against me, a little with me, pretty much against me, and then stayed against me. And I bought 5 options, 5 puts of at $3. Doesn't matter what strike. I mean, it was the $90 November monthlies if it matters to you, which it doesn't. I paid $3 for 5 calls and I sold out at a loss at $2.80. I lost $100 on this trade. And I made a little more on the Toll Brothers, and that was my day. There is not a lot. So now to share with you the phone call. Okay. So I had a phone call today. Now, I don't make out with people and tell, or was it kiss and tell? French kiss and tell? I don't make out with people and tell. I do preserve the confidence of the people around me, but there's somebody extremely famous who runs a fund, a very well-known fund, who's worth over $1 billion, who I had the pleasure of speaking with for a nice 18, 19-minute conversation. Of course, I looked before I hung up to see how long I was talking for him. And he was picking my mind and I was picking his mind. And one of the things that I've noticed is when I was talking to him, I'm like, how do you feel about this environment? And the dude was trading a little longer than me. I asked him, he started in 94. So I guess that's a hint. I'm not going to drop his name because, again, I'm not here to betrays confidence or whatever. And not that he asked me to promise not to tell anyone I was talking to him, but it just not the right thing to do. And he's been trading since '94, and I said, "What do you think of this environment?" So first of all, when I see his phone ring, I got excited because I haven't spoken to him in a good 2 years. Stepped away and I'm like, "Hey, what's up? How are you?" And he's just basically saying, yeah, what do you think this? He's talking about the political environment here, how it could affect the market, the geopolitical environment, how it could affect the market, and all these things. And I basically was giving him my opinion on it. And then I'm like, what do you think in the market? And he says, Mark, I'm looking at all my managers, and every time I walk in the room and I look at them, they look at me and they just shake their heads. Now, granted, I'm on the phone with him, but like he's like, they just look at me and they just shake their heads. They just shake their heads at me because nobody has ever seen an environment like this before. And I think the market is really interesting because I remember that in 2008 and 9, there was sort of a new environment. The market has a way of showing that history does not repeat itself always. That's the funny thing with the market, because people think, well, history is going to repeat itself. And yeah, history does repeat itself, but at the same time, history is also being written. So you could have said history repeated itself when back in the 1800s or whatever, when let's say when the stock market was 20 years old. You could have said, yeah, history repeats itself. Are you saying we saw nothing new since the first 20 years of the market? Everything we see today is the first thing that we have, the something we could have related to from back then. So I was telling him the same thing. I'm like, look, he knows the room we run here. Um, I'm not gonna blast, I'm not gonna tell you if he's in the room or not because he isn't. But one of his managers are, and I'm just talking to him. And I'm telling him, like, and I'm explaining to him, like, I have never seen this in my 19 years as a trader, action like this, because October usually picks up like that. But instead, it seems like we're picking up like this, like, as opposed to like this. And it seems like with the slowdown, I'm just trying to tell people to, slow down, don't throw a lot of risk on the table. Yeah, you might miss the up move when it comes, and that's what everybody's afraid of in these days. Like he was commending me on my Baba call recently, and I said, that wasn't even that great of a call. And he's like, yes, it was. And I asked him, I'm like, well, how much money were you down on the Baba call after I called it out the first time you bought it? And he said that he was down 1.2 million on my Baba call before making $5 million. And I'm like I had to like go get up off the floor and scoop my jaw. And he liked that call. And I'm like, if I was down $1 million, I would turn into Super Saiyan Melnick. My hair would go blonde, and I would be like hovering, like I would go crazy. But with that being said, he has never seen an environment like this before. I have never seen an environment like this before. And I'm basically telling him the key thing to take away from the situation is that the moral lesson of this phone call is history does not repeat itself always. In fact, what I have seen is more often than not, maybe not more often than not, less often than not, but often enough where it's not like, oh my God, is it really happening type thing. History is actually being written for the first time a lot of times, and it is repeating itself. So a lot of these traders, when they look back and they see this market, they're trying to say, when was the last time the market was like this? And they can't find a time in their lives. That is because a lot of times it just never existed before. All right. So while the lessons of history are very important to remember, especially when it comes to, I would say history is more important in humanity's most evil moments, wars, world wars, other such things. And history is really important when it comes to that. When it comes to the market, I don't think history is that important because if you're actually just focusing in on what works today, sure, you want to tell me the history of Enron is important and how it collapsed and the financial crisis is important. The funny thing is, you and I have no control over that. We cannot see that You know how many times people in the past 5 years have been talking to me about a housing crisis, and I'm like, okay. Or how many people in the last 10 years have been telling me we're ready to go into a bear market? Remember all those people on CNBC were like, we're going into a bear market, we're going into a bear market, market's going to drop 50%, market's going to drop 50%, market's going to correct 20%, 30%, 20%, 30%, and it doesn't happen. So what, like when that happens like that, it's not even that October is a down month, Marilyn. You're right, it is statistically speaking. It's the type of action in which we are receiving, in which it's more of the analysts. Have we ever experienced 10 straight years ever in human history of up move in the market? Because this is the 10th year. Let me show you. This is why I predicted the Qs to close red this year. So far, I'm not right, but so far it's not the last day of December either. Has the Qs, that's my question. Has the market, I'm using the Qs as the example, even the spiders, has the market ever went up 10 years in a row without one red year? Meaning it closed higher than where it opened 10 straight years. Has that happened? Open versus close. You open up at a certain price in the beginning of the year, you close higher at the end of the year. Has that ever happened for 10 straight years? Here's year number 10, ladies and gentlemen. You see this? You see this chart up here? That's year number 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and here we are in 2018. It's kind of crazy. So remember, I don't think so either, Marilyn. But I mean, I should do more statistical analysis on that, on the S&P. We are in unprecedented times, and the smart thing you could do right now is tear down until something makes sense. Don't, I know your bills are still coming in. I know your rent is coming in. Believe me, if after I saw what my wife ordered and everything recently, and I see my credit card bills, I'm like, I couldn't tell if that was my credit card bill or a customer service phone number. I'm like, what? Like, what the hell is that? But I understand people have bills coming in, and I understand that not everybody has a cushion to fall back on or the luxury of that. The last thing you want to do, this is the longest bull market in history. Yeah. The last thing you want to do right now as a trader is lose money you can ill afford to lose. And while waiting is not the sexiest thing as a market day trader, believe me, these analysts out there, I think you know how you have like PTSD, like post-traumatic stress disorder. Um, I'm gonna make a new one, PDID. I have a new one for you guys. So PDID, we're gonna share it with you right now. So PDID, because this is what is happening in the market. This is what is happening in the market today. So PDID. This is the new disorder. There should be a drug. I'm sure Bristol Myers will be advertising it soon, and it's PBID, PBID, and this is going to be post bullish idiotic disorder, and it just seems like every single analyst. So we're going to talk about signs and symptoms. It seems like every single analyst out there is really suffering from post bullish idiotic disorder, where they're just really unable to, be bearish on something. And it's crazy because they're just so used. This is post-bullish idiotic disorder, and it seems for the first time that I have noticed every analyst is suffering because they've been bullish for so long, they just don't know how to flip the switch. And it's going to be very important to flip the switch because soon it's going to bite them all in the butts because you have to realize, well, these big funds, they're all holding major positions in the FANG names. And a lot of these analysts are not downgrading the stocks that they have upgraded because the market turns down. So what they like to do a lot is these analysts will wait um, I mean, they really need to make a drug for this because that would get the market moving again. Maybe like some like Metamucil or maybe something like that would help them to just get everything out of them. But, that's what they're doing. And they'll watch the Qs drop 10 points, and then the same day the Qs are up 3 points, all of a sudden they're going to come out and reiterate their targets. You know how many idiots out there still have $240 targets on Facebook? Like, you know how many idiots out there still have $240 on Facebook? And I'm not saying Facebook will never again get to 240, but just cut the BS already. Just cut the crap. It's 154 bucks. Okay? It's 154 bucks. You're not going to get that move to $240 relatively quickly to the point where you look intelligent calling that. And they'll just sit there. And how far does Facebook have to go down until they come back and they say to their firms, my analysis sucked. I'm wrong. When do they get to that point? Because as soon as they get to that point, if they ever do get to that point, this market will collapse upon the weight of the FANG stocks alone. We are in a very dangerous time with everything in the environment and whatnot. I'm not coming out, and please don't get me wrong, I'm not saying that we are going to collapse from this point forward. I'm just saying Amazon earnings are going to suck. And I've seen the market gap Amazon up on those earnings, and analysts look for every good thing about Amazon. Uh, it's going to suck. They're not going to penetrate China. They haven't penetrated China. And if you thought there was any plans to penetrate China with the US trade war going around, China doesn't want to have anything to do with any US company right now. They're going to dig their feet in the heels, and underneath their heels will be their entire population underneath their heels, grinding their skulls into the mud. And that's what China, at least, are looking like they're doing. Now, a very likely scenario, Trump will meet President Xi in the G20 summit, and they're going to rectify this, and that could help the market. So many things can help and hurt the market, but you just have to approach it a little bit more intelligently, and I think you're going to be good. So that was my phone call. Overall conversation. Market history is being written as well as repeating itself. Don't forget that. And with that being said, our precise daily stock levels. Why are these levels important? Because we gave you 223.30 last night for Apple. Again, these levels, nothing's 100%, but they're free levels. We said 223.30 was the resistance on Apple last night. Today's high in Apple, $223.36. We were off by 6 cents. We give you accurate algorithmic levels daily, and there is very good statistical probability for intraday trades off of these levels. Take a picture with your cell phone, hit print screen, do whatever Apple command on your Apple computer it is to capture your screen. Write down the names that are important to you. Here are your algorithmic levels for tomorrow. Very important with all the rising wedges forming to know where your resistance and support levels are. And of course, with that, we go into our game plan. The game plan stock I'm giving tonight is Clovis. We're gonna talk about Clovis here bearishly because the stock has just been such such a free faller recently. I mean, the stock has been obviously getting pummeled and falling again today. I'm looking for a simple break of today's low 2057 if you're watching some of the game plan names. Forex. I did take a couple Forex losses recently. I was on a tremendous win streak as well. But if you wish to copy all of my Forex trades, all of my live trades, they're right over here. Got two buys, US standard lots. Those are the two symbols I'm watching. There we go. Here are my live bids as we speak. Those are my orders in right now. There's my stop loss in case I get filled and I'm wrong. There's my take profit in case I get filled and I'm right. And of course, with that, we go into our full stock analysis. That is, any stock you are watching, my levels and thoughts. And of course, that is for Newsbeat Live members only. We're the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.